What's behind this, I guess, excitement in India's REIT space?
Great. Well, thank you, Haslinda, for having me on your show. What's behind the excitement? I guess the Indian office market has been evolving over the last decade, serving largely international technology type occupiers. And of course, the world that we're all inhabiting is becoming more dependent upon technology. So the customer base for our type of office product and therefore the REIT product is actually doing quite well through this difficult period. India as well has not been so badly affected by COVID as some of the Western markets. So we're hoping to see an acceleration in demand in the coming months. We certainly saw a pause as people assessed what their businesses were going to do in response to COVID. But we believe that there will be an acceleration in due course of leasing interest going forward. And of course, there was a second REIT that listed late last year, another core focus office REIT. And again, that would be relying on the large scale Indian technology office sector.
And to your point, we're seeing some of the largest deals in the office space area in the last 2 months. Are we expecting more? And what's the reason behind, I guess, global investors riding this wave?
Yeah, I think there's two parts to that. The occupier side, so the leasing side, clearly leasing large quantum of office space is a long-term decision for any global corporation. We certainly aren't yet back to what we would have said was the pre-pandemic leasing numbers. I think that will take another couple of quarters. But we do see solid interest and demand traction, both from international technology companies who are responding to that bring forward in technology spends, but also the large scale Indian technology side. So on the occupier side, things are looking positive because of the core focus on technology. On the investor side, I think the fact that we have been able to give a total return that's in excess of 20% since listing, that we have returned $370 million in our quarterly distribution since that time, that in a global market that is hungry for yield, the REIT product stands up well, and of course the potential for rental growth and growth in the portfolio also supports that. So both from the occupier and the investor side, I think we're in a good place. That's not to understate the challenges that everybody had in 2020. We're certainly positive that 2021 will be a better year.
Well, equity markets, of course, have largely ignored what's happened with the pandemic. The question is the same really applicable to what's been happening with the REITs? And Michael, you mentioned the 20% level. Is that the sort of return that you're expecting going forward, or is that a one-off?
Look, I don't think I can comment on future projection, but what we have said is that we do have visibility to that quarterly distribution at a similar level, which is in the 6 to 7% quarterly annualized quarterly distribution. Our business is a very solid, resilient business. It's not a development business; it's an asset owning business, and the addition of that 9 million square feet at Tech Village and the income that produces, the new development that we're able to do on campus as a result of that will support our continuing of our quarterly distribution as we've stated in the past. So yeah, we feel positive. The 20% number that you referred to, of course, is a total return, a combination of the distributions as well as the base capital value. So distributions we're very positive about and will be in line with past.
Michael, what about, I'm sure you made allowances for this, but working from home, has that really dented anything as to what you've been witnessing?
Yeah, so I mean that's a great topic. One of the things that we observe from the data, and we monitor attendance in our parks on a daily basis since last March, when the lockdown started in India, is that there's a very different approach between international companies who are still at that work from home environment, many of them under 10%, but the domestic companies moving back into the 20 to 40% of their staff back at the office. One thing is for sure is that there is messages, both international and domestic, that the young demographic who are working in the technology sector, in our business parks and in this industry, are looking to get back to those collaborative environments, those environments where they're able to foster innovation, make friends, build their career, and so on. So we do see that there will be more flexibility in the way in which people work, but that our type of office space and type of user in India is very different from perhaps the downtown Western office model. These are business parks where, for many of the young people working in them, they come for breakfast, lunch, and dinner. It is their home. It is the social environment. It is a place that has sports facilities and creches and so on. So as one business leader said to me, for many of those people, the office is their home. So we think, yes, there'll be more hybrid, but there will be better quality spaces, and that, of course, will benefit our type of portfolio. And you know, there are studies that show that in Asia, in Asia, we're going to see continuing increase in office requiring jobs over the next decade.